Our first company tonight is AIM-listed IronRidge Resources, which has a market cap of around 110 million currently. And IronRidge has made three major mining discoveries in 3 years, which is a great record. And with the most commercially advanced being the fully funded lithium assets at Ewoyaa in Ghana. Next is the Zorano Gold Project in Cote d'Ivoire and the Dorothy Gold Project in Eastern Chad. The plan is to keep the core lithium business, but change the name from IRR to Atlantic Lithium and to demerge gold into a company called Ricca Resources Limited. Vincent Mascolo, CEO, has done an excellent job at driving this mining and exploration business forwards over the years. And Vincent joins us live from Australia. Good evening, Vincent.
Good evening, Donald, and good morning from where I am in the world. Thank you for having me tonight, this morning.
It's our pleasure. Now, are you going to take it away from here for us, Vincent?
Yeah, certainly. Thanks very much, and welcome everyone that's watching this evening in London. IronRidge Resources is a diversified explorer and developer throughout Africa. Our commodity of focus is gold and lithium, and today I'll be talking about unlocking shareholder value through the demerger of our suite of gold assets in Cote d'Ivoire and Chad into a separate, fully funded gold-focused entity called Ricca Resources. And then I'll be touching on the rebranding of IronRidge into a pure lithium-focused entity called Atlantic Lithium. Here is our disclaimer. Please read that when you get a free moment. The corporate snapshot as IronRidge stands at the moment. The key takeaways from this slide are we have significant, like-minded, visionary and supportive shareholders, and we welcome Piedmont Lithium to the share register. We also have management is heavily invested into the company, which is always a positive, and we also have a very healthy treasury of $28 million US, and we have no debt. As Donald suggested, we're African focused. The key areas that we operate in are Ghana, Cote d'Ivoire and Chad. We're domiciled in Australia. We're listed on AIM with the ticker IRR. We recently listed on the OTCQX markets, and we have made 3 discoveries in 3 years, and it's those discoveries that are now creating 2 separate focused entities to drive shareholder value moving forward in the coming months. Look, this is a very busy slide. I'm not going to labour on it too much, but our first discovery is the Ewoyaa Lithium project in Ghana, which is now fully funded production through Piedmont Lithium's investment of around $102 million US. And we actually have the same ambitions under what will be the Ricca banner to deliver the same again with our 2 flagship projects, the first one being Zorano in Cote d'Ivoire and the second being Dorothy in Chad. Touching on our first fully funded discovery, which will form the backbone of Atlantic Lithium, and we'll touch on that later. Ewoyaa has a modest maiden mineral resource estimate with robust economics, and on that basis, we have been able to secure a fully funded development package via Piedmont Lithium. We have fundamentals support very robust scoping study outputs. With an initial mine life of 8 years, we've delivered robust economics, and from the pit layouts in pink, which you can visualise that the majority of our lithium-bearing pegmatites are outcropping, making for very attractive operating costs, capital costs, and impressive life of mine revenues. We're in pole position to service the US and European markets, and we've shown that through the investment with Piedmont. But we have exceptional geology, metallurgy, mineralogy. We have industry standout logistics. We are 1 kilometre from the national highway. We're 110 kilometres from the deep sea port of Takoradi. We have multiple high voltage power lines running adjacent our site. We have a very simple processing flow sheet, and we have pilot tested all our materials through ANSTO to produce high quality battery grade lithium. As you can see, our lithium project in Ghana, Ewoyaa, is ideally located about halfway between the capital Accra and the deep sea port of Takoradi. We have significant exploration upside. We have only explored 13 square kilometres of our 684 square kilometre tenure package to date. Drilling is ongoing, and we'll talk a little bit about that in the next slide. As you can see, from our resource modelling to date, we're now targeting a resource upgrade in excess of 20 million tonnes. As you can see from the black outline, that is the current resource of 14.5 million tonnes. None of the yellow outlines have been included in that resource, and they will form part of the next resource upgrade, which I believe will come under the Atlantic banner. And there are also other areas that are not included in this slide. So we're very hopeful that we will deliver further significant resource upgrade and even better financial economics in the coming months. Moving on to our gold portfolio, here you can see what will form part of the gold demerger. Gold in Cote d'Ivoire and Chad will soon come under the banner called Ricca Resources. And obviously, as we said, our lithium portfolio in Ghana and Cote d'Ivoire will come under the banner Atlantic Lithium. So touching on our portfolios in Cote d'Ivoire, Zaranu is obviously our flagship project, and we believe that this will underpin the initial Ricca Resources valuations moving forward. We also have a very impressive tenure package called the Ewoyaa portfolio over to the central west of Cote d'Ivoire. This package surrounds Tieto's roughly 3.4 million ounce deposit, and this is also a drill ready target for the company, and we plan on drilling that early next year. Then we have also our Kineta portfolio in the northeast. This is more of our early stage, and we believe this will produce another pipeline of discoveries in 2022. Zaranu, as I said, is our flagship project in Cote d'Ivoire. It spans some 47 kilometres of tenure package, and as you can see in this picture here, it's a highly weathered zone, which effectively will form part of our early ounces strategy. So from surface to 50 to 90 metres of weathered profile, free dig, early ounces strategy, which will underpin the valuation moving into 2022. As I said, we've got a 47 kilometre strike corridor defined with some 16 kilometres of hard rock artisanal workings at Zaranu. We have 4 main areas of focus, which will deliver a maiden mineral resource estimate in early 2022. And those 4 areas are Owasso, Mbasso, and what we call the coffee bean structure, and obviously Yakase to the southeast. You can see the drilling highlights there on the left-hand side. These are very impressive grades, but the key takeaway for us is the grades at depth. So we know we've got mineralisation in the top 0 to 90 metres, but in the fresh rock, we are also hitting significant grades. So 24 metres at roughly 13.5 grams per tonne from 136 metres, etc. I won't go through these highlights, but these are very impressive grades, which will underpin the valuation of Ricca moving forward into 2022. And as I briefly touched on, we have an impressive tenure package around some 1,100 square kilometres surrounding Tieto Minerals' Ewoyaa 3.4 million ounce deposit. We know that the gold-bearing geological structures run along strike north and south into our project area. This is now drill ready, and we'll be looking to put the drill rigs onto that in early 2022 as well. So a lot of stuff happening in early 2022 under the fully funded banner of Ricca Resources. In Chad, this is our longer term strategy, but a very impressive portfolio we have in Chad. Here you can see Usman. He's a geologist on secondment from the Department of Mines in Chad. He is channel sampling our first trenching program at Dorothy, and Dorothy is obviously our flagship project in Chad. We have a large-scale mineralized province in Chad. Our tenure lies within the sub-Sahara metacraton, with a potential analogue of an intrusive-related gold system. Our artisanal friend down in the bottom right-hand corner, he is manually beneficiating and sorting gold-bearing rocks, and his tailings are running to date at around 7 grams per tonne. So we have very much high hopes for Dorothy and the broader portfolio in Chad. But as I said, Dorothy is our flagship project in Chad. We have a 149 square kilometre licence granted over the Dorothy prospect. We have an anomalous footprint of approximately 3 square kilometres. And as you can see from the other images, there's the trenching that you can see in the bottom left-hand picture, and some of the nuggets that we've extracted through our trenching program. The picture in the centre, you can actually see the sheeted veins, and we're quite excited, and we're looking forward to, once again, drill ready, and hopefully we'll have the drills turning there in early 2022, probably late January or February. As I said, Dorothy is a significant discovery for IronRidge, which you can see the blue outline is the main vein zone, as we call it. And luckily for us, we have multiple repetitions of this main vein zone. There's some of the highlights on the right, but we have several repetitions. You can see them going through parallel to the main vein zone. And that is 3 kilometres long by 1 kilometre wide. That is quite an impressive anomalous footprint, and we look forward to putting the drill rigs into Dorothy early next year. Here you can actually visualise that we've got such a significant tenure portfolio in Chad, and we have across the Dorothy, Ewoyaa, Kalaka and Nabaké tenure packages, we have in excess of a 40-kilometre strike zone, and we're looking forward to sinking our teeth in that. You can see the picture there with the artisanal workers beavering away, extracting gold from surface. A totally different regolith than what we're seeing at Zaranu. So this will also hopefully deliver a coherent and continuous mineralised structure as we start drilling in 2022. So look, that's pretty much our package. Just a quick overview of our business model in IronRidge, and it was ideal to give you an overview of the projects ahead of talking about restructuring to unlock the intrinsic value for all shareholders. And as part of our exploration business model, originally it was designed to minimise risk and maximise the potential of delivering multiple company makers. And we have done that through our first discovery, the Ewoyaa Lithium Project in Ghana, which is now fully funded to development. And we hope to emulate that through this demerger. So unlocking the intrinsic value of our portfolios, Ricca Resources will take ownership of all the gold assets in the House of IronRidge, and IronRidge will be appropriately branded as a pure lithium play, will be called Atlantic Lithium. We have delivered our first company maker, soon to be called Atlantic Lithium, and we hope to emulate that. With our gold initiatives under the new banner, Ricca Resources. So, touching on the timeline, proposed timeline, terms, and demerger capital structure. Look, I won't go through the timeline, but I will touch more on the terms and capital structure moving forward for Ricca Resources. So existing shareholders, as of a record date of the 23rd of November, will be entitled to a 1 Ricca share for every 8 shares held in IronRidge Resources. And then on that same record date, existing shareholders will be afforded a priority offer in Ricca Resources. So what you will actually get is the opportunity to hold exactly what you have in IronRidge, soon to be called Atlantic. You will hold exactly the same. You have the opportunity to hold exactly the same interest in the newly formed and rebranded Ricca Resources. It's a very compelling story. So what we have is IronRidge is forwarding an initial cash injection to Ricca Resources of 7 million Australian dollars. And under the priority offer, which is now fully underwritten by Canaccord Genuity Australia, we will receive a further approximately 7.2 million in funding. That will give us a cash balance post priority offer of roughly 14.2 million before costs. And we will be going to market effectively with a cash balance of 14.2 and a market cap of around 14.3 million Australian dollars. So it's a great opportunity. We're staying private in the short term to allow us to drill these assets a little bit further, and that will surely underpin a spectacular valuation once we identify a recognised exchange moving forward into 2022. So moving along, what we see here is this is what your IronRidge will look like, hopefully post and subject to shareholder approval on Thursday, the 18th of November 2021. We'll be charging the change and we'll be the first lithium producer, we believe, in West Africa. From a corporate perspective, not much really changes from IronRidge to Atlantic, other than the transfer of $7 million from IronRidge to be called Atlantic into Ricca Resources. Sorry, it's a bit of a tongue twister, but the investment case is still compelling. Nothing's changed. Same capital structure, same shareholder base, and the investment case is getting stronger and stronger by the day. We're accelerating the projects to production. Drilling is ongoing. We have multiple drill rigs on site. Studies and permitting is underway. We'll have an impressive lithium portfolio incorporating our 774 square kilometres of tenure in Cote d'Ivoire. We're fully funded, as I keep saying, to production via the Piedmont investment. We have a strong cash balance of 22. We will have a strong cash balance of $22 million US. And we have significant exploration upside, as we've only explored 13 square kilometres of our 684 square kilometre tenure package. And we have strong ESG credentials. 98% of our staff are Ghanaian nationals with a low carbon footprint. I won't dwell on this, but this is a snapshot of what we've already rehashed in respect of our robust economics from our Ewoyaa lithium pegmatite discovery. And we look forward to updating the market with our resource upgrade and upgraded scoping study under the Atlantic Lithium banner in the very near future. So post the demerger, this is what Ricca Resources is going to look like. Once again, subject to shareholder approval on the 18th. However, the capital structure, which everyone will have the benefit of, is very impressive. Tight capital structure with a market cap of around 14.3 million at 10 cents. That means if everyone follows their money, your average buy price is around 5 cents Australian. And if we are to list, say, on the Australian Stock Exchange at some point next year, or any recognised exchange, you will see that there will be a significant re-rate on that entry price at that entry price in the coming days. So the investment case is strong for Ricca Resources, fully funded, fully cashed up to the tune of 14.2 million Australian dollars. We are already well established, being in Cote d'Ivoire and Chad for 4 or 5 years, and we are hugely undervalued on these portfolios alone. So Zaranu and Dorothy will certainly underpin our valuations moving forward under the Ricca banner.
Okay, Vincent, one more minute, please. One more minute.
And please meet our teams throughout Africa. As you can see, there's the Ghana team, Cote d'Ivoire team, and our Chad field team. Thank you very much. I welcome any questions.
Vincent, thank you very much indeed for that. What do you need holders of IRR stock to do on Thursday, the 18th of November? Presumably now, ahead of 18th of November. What are you asking them to do?
Well, they can either buy shares to get on the register and be on the register by the 19th of November, or they can hold their stock. And then they will receive the 1-for-8 shares, and they will also receive a priority offer to buy further shares at a very low price, entry price.
Okay. So when does IronRidge become Atlantic Lithium? When does that happen? And do you know what your new ticker might be? And in broad terms, what happens next?
Okay, so post the AGM, we will post an AGM in favour of the resolution, which is on Thursday. I think it'll take probably 3 or 4 days for that to actually take effect on the boards. The ticker will be ALL, ALL, Atlantic Lithium. And look, we're now Atlantic Lithium being a fully funded discovery. It's now focusing. It's focusing on putting a project into production. So we've gone from explorer to developer to now taking a project into production. So and with a healthy treasury of $22 million US, we've got a lot of money to spend on initiatives and further exploration initiatives on our Cote d'Ivoire portfolios, Cote d'Ivoire lithium assets, and any other new opportunities that might present themselves.
To what extent are you exhausted? To what extent are you delighted? Or is it simply a combination of the two of those extremes?
We're probably both, and frustrated to see the share price labouring at this level. When you do a peer comparison, our nearest peer is ASX listed and has a market cap of near 4.5 times us. So, look, hopefully the rebranding, becoming refocused as we move to development, put a resource upgrade out, update the scoping study, and as we advance the studies into the new year, hopefully we can add some additional comfort to the AIM market.
Okay, Andrew Adams asks a question. He asks, what's the current level of purity of the lithium tested by ANSTO? The last numbers I've seen were 99.92% back in January 21. Are these figures high enough for the EV market?
Yeah, absolutely, they're high enough for the EV market. But we're producing a spodumene concentrate, which will produce a premium product. Somewhere repeatedly, we're getting in excess of 6.3% lithium oxide. So we'll be able to command a premium price for that product. But what we did want to display to market is that our product can produce a premium battery grade lithium, but the purity is also by virtue of that we have low deleterious elements. So we have low iron, low phosphate, and that's what also complements a high purity product.
Okay. A couple of people have asked about unlisted shares. This is bad news, I'm afraid. Brace yourself. Their brokers are unable to handle unlisted shares, basically, says Jack Turkus and Martin Orr. People at Hargreaves Lansdown, who are one of the UK's larger brokers, they're unable to provide access to the priority offer, for one. Okay, so he just says that there are issues. I'm more than happy to send these 2 emails on to you offline. Do you have any thoughts on that?
Get a new broker. Look, I don't think it's as complicated as people think they are. Everything goes through DI, and the nominees should be able to manage the process. But also, look, we'd encourage people that are keen and interested to contact us directly, and we will see what we can manage. But technically, the nominees should be able to manage this process. But in respect, if you are on the register and we can prove that you are on the register, there should be absolutely no reason why you should not be able to receive a share certificate from Ricca Resources, and then we can manage that process together in 2022 as we move forward onto another exchange.
Got that. Good man. I'll put those people in touch with you. Andrew Adams asks, what further steps need to be taken before you actually mine the lithium at Ewoyaa, and what are the timescales on that? Okay.
So look, we're very advanced. We're almost 2 years through our environmental monitoring cycles. So we're midstream studies, and we're preparing for permitting. So we think that we can be in production by no later than 2023, in short.
Okay. Josh Cole says, why do you believe the share price has seen little sustained positive movement in the medium term, despite reasonably consistent news flow? I know you've stated before you believe a fair value would be 50 pence minimum. What's suppressing this?
We were hoping you were going to tell us that, Donald, because we have no idea. Everything's right about this project.
It does seem to be.
It's standout, it's exceptional metallurgy, it's exceptional geology, second to none in respect of proximity to operational infrastructure. It's a developer's dream. The resource is growing. You only have to look at the last 3 announcements we put out with drill results to know that this resource is going to grow significantly. We don't understand it when our peers in Australia have 4 and 5 times multiple on our market cap. We don't understand why the market's not appreciating it. But look, the reality is we have a very strong shareholder. We have a very strong shareholder base through our major shareholders. So no one can come to us aggressively to try and pinch the company. And we're fully funded. So look, we're just going to keep delivering. We're just going to keep ploughing through all the noise, and hopefully the market will appreciate in time what we're doing and what we're about to achieve.
Indeed. Okay. Michael O'Brien asks, or he says, thank you, Mr. Mascolo. It's always nice when they're polite on the way in. Can you tell us if and when the Australian management team are moving to Ghana? It seems difficult to manage remotely.
No, that's not the case. We have exceptional teams in Ghana, as 98% of them are national. We have Ewan, as you can see on the last slide there. He stands out. He's our Welsh exploration manager. We have weekly team meetings through Zoom with our technical meetings with our teams. And look, I think, to be honest, we'll all start travelling early next year once Australia's regimented COVID regime lifts. But no, everything is operating smoothly, and my recommendation is to any current shareholders or potential investors, watch this space over the coming weeks.
Okay, talk us through the deal with Piedmont Lithium. It was announced in August. It fully funds the project to production, the lithium project to production, for $102 million. Talk us through that. Perhaps that'll get the investors excited.
Yeah, look, that's a great deal for the Ewoyaa project. Piedmont Lithium's investment is clearly an endorsement of the project and the exploration upside that it will deliver in the coming months and years. So Piedmont, it's a 3-stage process. First stage is complete. They invested $16 million into IronRidge Topco. That will fully fund Atlantic Lithium moving forward. Stage 2 is that they need to spend a combination $17 million to advance the Ewoyaa project to DFS. We are already spending that money aggressively, progressing studies, expanding the resource. And we have a minimum DFS criteria. So we believe by virtue of the scoping study that criteria is already achieved. And if Piedmont Lithium elect not to proceed, then we get to buy everything back for $1. So low risk for investors. But basically, this transaction means that IronRidge shareholders and investors get a 50% free carry, 50% of the product we maintain. We've given away no rights to our product, and there's no further risk. So we won't be raising any capital. There's no further dilution, and we're building a project to basically share in revenues greater than 1.5 billion life of mine. So this is a great opportunity to be in. I mean, if we had to do this ourselves, then everyone would be crying, "Oh, capital raising on the horizon again, etc." Well, we've taken that angst away. It's fully funded. There's no more capital raisings, and there's no debt. So there's no risk.
Vincent Mascolo, thank you very much indeed. We're out of time. Very grateful for your time, Vincent. Very grateful for all the questions. And thank you very much indeed for getting up in the middle of the night and speaking to our investor audience.